I hope everyone's doing well and welcome back to another video. So today's video is actually going to be a trade breakdown, but quite a different one of a trade we actually missed. And the only reason, since I've made a lot of different trade breakdowns now, some encompassing sort of the London session, some in the New York and blah, 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 lots of different scenarios. And of course, I haven't made some for a little bit. The reason I'm making one today is there's something specific that I want to discuss, right? I want to discuss in particular, right? Usually I'm not too fussy about entry. I'd rather, we see a clear move, we get in. And today we had something along those lines, but we didn't really take it. So I just want to quickly go through why we didn't take it. We'll cover that. And we'll also cover what's the sort of outlook going into tomorrow and the expectations for price, right? So cool. Let's get straight into it. So as you guys know, right, DXY has been pretty consolidated, but what has happened as the week was progressing, we actually swept the previous weekly low to start off. From that previous weekly low sweep, which was around here, we had some displacement higher. From this displacement, we had a retracement to this fair value gap, and then from here we started pushing higher once again. Now, as we pushed higher from here, which is today, right? So this is London's candle essentially, and this is New York's candle. We wanted to target the previous weekly high. Right, that was the expectation of a price, that we want to see higher prices towards the previous weekly high. It's the most obvious target, and we've had a sort of interim manipulation. I wouldn't exactly say this is a manipulation, but I would say this is a sort of short-term manipulation where we swept the previous weekly low, taken that sell side, and that's been used to essentially propel price upwards and cause the midweek reversal, right? And again, that was also sponsored by news. Right, it's occurred on the day of FOMC, right, on the Wednesday, which was yesterday. And then, of course, as you guys can see, retracement, and then we wanted the continuation, especially, based on yesterday's daily close wasn't, crazy by any means. I'll be honest, it wasn't amazing. And when the daily candle did close, I didn't really have high expectations. I knew it was essentially a 50-50 with price retracing here, but we had this fair value gap. Price dipped into this, respected it. As you guys can see, it's pushed off, right, very nicely coming into London session. Now let's zoom in a bit more and break it down by the session. London session wasn't something I attended today, but as we can see, it gave a clear move higher, right? You had a Asia consolidation, no run on sell side, which I think would have maybe made it a bit difficult for any London traders to particularly catch anything. But as price worked this way up here, heading into the session, right, I think it became more obvious, we've taken the buy side, but, price is poised to go higher towards the previous weekly high. Now, the red folders we had today, or the news folders rather, this one is the one we wanted to sit out of. We wanted to let this pass, right? The monetary policy for the pound, and unemployment claims was something that we were more interested in. So the way this was presented in the chat, right, was as we approach New York, right? Remember this, New York, we have a 1 hour fair value gap just below us. Right, very nice, easy fair value gap here. Mark this out quickly to provide the framework. And we are very close to previous weekly high, so it will make for a very good short-term trade, right? Now, once we've hit this fair value gap, we've actually very sort of concisely hit the middle, consequent encroachment. Big ICT term for you guys, right? When we hit the middle of the array. And from here, we essentially wanted, displacement away. As you guys can see, right, particularly in the chat, what I said to guys was, as the macro approaches, right, as 8:30 approaches, I would expect a entry to be offered. Now, as you guys can see, you have the run up, you have these sort of wiki candles, and then of course the actual move to the previous weekly high. So why did we struggle for an entry is the big question. So what were we waiting on? So of course, from this move, as we've entered the session, what I've said to everybody, watch the 1 hour fair value gap. We have a clear consolidation going into the session, particularly on the 5-minute, accumulation, manipulation, and then of course a clear target for distribution. These are very, I would say, textbook and high probability trading ideas where we have an accumulation, you have a zone to manipulate to, and an obvious zone to also target, right? It makes for very good trade ideas if you can, get in on these. Another particular sort of thing that we were watching was the idea of this 30-minute candle. This 30-minute candle had a clear sweep and a big flip. So, coming from the accumulation, seeing something like this, we would expect the next candle to trade higher. So in regards to entry, initially we were watching a 5-minute fair value gap on the lower time frame. I believe it was maybe the 825, something like that. But what that's changed into is this 15-minute fair value gap. This was the sort of area of interest. We'll mark this out for line. And what the entry would have been, you know, let's say from about this high, we'll just draw it out as such. Or rather, we'll have a bit of a tip here, is we actually use this low here. Why I consider this low? Because the odds are if price reaches this low, it's probably going to take that final low and take your stop loss out anyways, right? Just because of proximity. So we can afford to sort of use this low as an anchor in this scenario. So of course, using this low, understanding, you know, this is the 15-minute fair value gap. If you were to hit this on the DXY, right, let's just say essentially there, just about equilibrium, I would say. Stop loss there, target that, makes for a very solid 2.3, 2.4 R trade, right? Very solid. Now, as you guys can see, that black line that we had marked up, price does not reach that. Instead, what it starts doing is sort of, you know, a couple candles this way, big move down, doesn't hit it, then a couple candles sideways. And what I've looked for here, right, is that perhaps this is another accumulation, right? Maybe a smaller accumulation, but an accumulation nonetheless. And, you know, if we sort of shuffle through the time frames, it becomes a bit, you know, more obvious. Look, this is an accumulation we can box off. And what I actually wanted to see, right, particularly on the 15-minute, from perhaps one of these two candles, or rather most likely this candle, the 9 a.m. candle, the new hourly candle, to retrace over here, tap into this. And if it tapped into this, would have been extremely textbook entry, enter this, move away. Right, that is what we wanted to see. Now, we've had scenarios like this before where, you know, price has not met the sort of array and we've, you know, market entered. We just executed here. Now, the reason I was not confident market entering, right, let's say, for example, I'm hitting a buy stop. There's two things, right? There's two main things here. There's practicality and there's the logic. Now, let's just say the buy stop is when price is making a new high. So we enter with a buy stop, right? Now, the issue becomes if my invalidation is here, and my target is here, that's a negative R trade. That's a 0.7 R trade. We shouldn't be taking negative R trades. It doesn't make any sense at all, right? Now, the other way to hit a buy stop usually is when price has made that, you know, nice, obvious low. It's made it in a sort of high confidence area, and you're confident that this low is not going to get violated. Then you can anchor your stop loss to that new low. And you see here, even though the RR isn't as amazing as it was from entering down here, it's still solid. 1.5 R, that's, you know, that's pretty good. The issue here is, just those last couple sentences I said, that stop loss needs to be a clear invalidation point that you do not expect to get validated. In this scenario, there's always a chance, right? You've sort of run these highs, price has accumulated a bit, and you might hit that buy stop, price runs a little higher, and then comes all the way back down into that 15-minute fair value gap initially, respects it, and then runs back up, right? In simple terms, the reason we could not buy a stop in this scenario is because there was no clear stop loss to use. When we enter a trade, the logic is usually you're entering somewhere, you know, you have a sort of secure entry, you have a clear point for validation, and you have a clear target. If you don't have those three things, then usually you probably shouldn't be entering, right? Meaning, even if you have a clear point of invalidation and you have a clear target, but price doesn't give you a solid retracement, then it's missed you, unfortunately. And if there was a bit more space between here to the previous weekly high, maybe we would have got a nice different retracement that we could have used to hit. As you guys can see, bit of accumulation, runs higher, goes straight to the target. Not much we can do. So cool. I mean, I hope that answers most of the questions that you guys would have had. One thing I'll quickly cover is how we looked on the Euro USD, where it was actually cleaner, I would say. Back down to 5-minute. So cool. The sort of range that we were viewing for price, you know, I'll just keep it very quick. The logic's been offered on the DXY. As you guys can see, the Euro USD actually hits that sort of fair value gap. It doesn't reach that 15-minute fair value gap in particular here, right, as you guys can see here. But on the 5-minute is a lot cleaner, right? I won't lie. On the DXY, this sort of 5-minute wick here failed to reach the discount. And if it did reach the discount, it would have in turn hit the 15-minute fair value gap and offered our entry that we wanted anyways. But as you guys can see, it's a lot cleaner on the euro, where you could have entered about here. And let's assume you did hit this short. If a sniper entry would have been bang on. From there, as such, you would have targeted, once DXY hit previous weekly high, which was literally about there, offers roughly about the same R2.5, would have made a very good setup. Now, very similarly, if we were looking to sell stop this, and we've done it here using that same point of invalidation, as you guys can see, negative R. If we've done it here, it would have been a decent trade, very similar to DXY, 1.5. But again, there's a very logical reason why we did not go down that path. So cool. Hope that answers the questions about the setup. Now, quickly into the outlook for tomorrow. Get rid of all these markets first. What are we looking for? So, price has worked its way higher. Price has taken that previous weekly high. I'm unsure why this line is so sideways. A bit straight. So cool. Price has taken that previous weekly high, but we're still in this sort of accumulation zone. What I am looking for from here is accumulation. I still think the manipulation, the real sort of manipulation, occurs this way, and then distribution this way. So essentially, going into tomorrow, we're looking for higher prices. If we're looking for higher prices, we're at this sort of very interesting zone. The area I would look for is mark the previous swing, see how price behaves here, and further to that, mark out this whole 4-hour fair value gap. We're already in the zone, right? We're already in this sort of interesting area, but price can dig deeper into this. Essentially, what we are looking for is displacement higher. If price displaces lower very clearly, then the previous weekly high sweep can act as the manipulation. But from the looks of it, from what we can see here, I would say this is still pretty accumulated, right? I think considering how big the accumulation is, I think we'll get a manipulation up here into this daily fair value gap, which we've had marked since the start of the week. And from there, once we're in this zone, then we can start considering the reversals all the way back down to see AMD, right? Had a good bit of Euro GBP, or rather GBP news today. As you guys can see, we hit the zone we were watching. This is sort of a daily fair value gap in particular we wanted to see hit. We wanted to see it met regardless of a bullish or bearish scenario, and it's also a weekly sweep. So if this candle trades higher tomorrow, which I'm anticipating, which I do think we will get, it's likely that this is going to be a eye of red sort of move, and we'll get expansion back to the highs AMD, right? That's about it for Euro GBP. We just take a quick look at the bond yields, considering these have been consolidated. I believe we're seeing something quite similar, right? We have the accumulation, have a bit of a run lower, and the way we've left these flat highs sort of pointing into the premium, I think it's likely we get that retracement higher, right? What we initially wanted to see was a weekly IO fed from this fair value gap, but as you guys can see, right, it's pretty consolidated, right? When we have a consolidation, you can't mark off the run higher, right? Essentially what I'm saying is don't write it off, especially considering the fact we're still in the discount. So if we can get this, and we count this as the sort of current, let's say short-term manipulation for the real manipulation. I know it's a lot of back and forth, but essentially what we're saying is this is an accumulation. We expect the manipulation towards the premium, dig into that weekly fair value gap and lower. Very similar to DXY. If we move that way, it helps DXY reach that daily fair value gap, and then the actual expansion occurs this way as we expect in DXY too, right? Take a quick look. There's much going on. I know Bitcoin was moving a little higher this week. I kept getting notifications. Nothing very interesting yet, I'll be honest. Not much to go off, just same as the weekly outlook. Just need patience there. Want to see what price wants to do there. And lastly, the S&P. We're expecting that 4-hour market maker buy model. Now we have got a bit of a kick up here, and we are coming from the discount. It's very interesting, right? But I wouldn't jump the gun just yet. We've got an inside weekly candle. I think essentially what that means is you need a bit of patience. As we go into next week, see how we open up, right? Which way does price want to run? Considering you've also had a lot of down candles, regardless of whether this is a reversal or a retracement, it's sort of overdue, right? Lots of down candles, is likely at some point you get some sort of relief and move back up. What I would like to see, right, especially now we're coming from that discount, got inside candle, perhaps next week opens. Of course, we got tomorrow as well, which could move price, but perhaps next week opens, sweep here, right? If we go down to 4 hour, yeah, sweep some internal liquidity, you know, equal lows like this, run higher. And if you go on the weekly in particular, it's a little fair value gap here. If you can start trading through things like this, then it's likely price is working that market maker buy model back up all the way to the highs, right? That's it for that sort of, you know, mid/late week outlook and the little trade breakdown. As usual, guys, any questions, anything I can help with, just drop me a message.